Welcome to TradeTheNBA.com. This is John. This report is for Monday, the 3rd of October. And so here we start. Market for the year going all the way back. If we follow that line, about 24% lower than from the open to start the year. Not a shock. We could see all of these signals from way back. We've had some nice rallies, which is typical of down move markets, and oftentimes they're sharp and significant. We've had a couple within this decline, some smaller than others. The last one being this major green move here. Then we had that brief split right here where we had the magenta, but red was leading it. And so it was literally, we're just waiting for the move lower of the magenta. And that happened pretty quick and all within single intraday, and that was because we already had positive extremes, so we knew that these were going to get filled back anyway. And it worked out just fine and broke down from there. And now it just becomes a question of how soon the market believes the Fed is going to capitulate and where the Fed put is. Some people think it's right around this 36 to 35.50 range. We'll see, because that would be where we would start to see some strong institutional support. This DOC, though, negative 19. Even if it starts to come back up, oftentimes what we're going to get is that initial comeback up. It'll fade a little bit, and it would be that second P2 that we would be more comfortable with. We expected the move once we broke the zero line here that had stabilized for some time to be tested again, and it was, and it immediately was rejected with sellers. So there was no momentum capability from it at that particular point. So we got new fund money coming in at the beginning of the month, so that could create some more volatility at the start of the month, at least potential buyers. There's more liquidity available in some of the lockup periods. And from an NQ standpoint, identical. And anytime you get these magenta pivots below the 23%, they always lead to new lows. And particularly with MBI white leading, it's pretty strong. And we talked about this before. This is also indicated here in the DOC readings when the orange gets trapped between the cyan and red lines. Whatever the direction we're going in usually is a continuation pattern from that point, and it follows along pretty well. And what you need to see is that dip of orange below red or green, and until that happens, you're still going to be in the continuation mode. So it's a nice little bonus to reflect on. Euro's been on a tear mostly because the dollar has struggled a bit because they think that easing is going to come forward. And if that's the case, then obviously that helps all the other currencies that have been under pressure, given the fact that U.S. rates are so much higher. Of course, you got the numbers out of the Eurozone. Inflation was running at near 10%. And there's a lot more negatives coming out of the European situation. Of course, no one's really talking about the impact of the explosions with Nord Stream and what that's going to do as far as availability. It's just not a good situation. From a gold standpoint, we can see that we've had that push up to the 23%. Red still leading it, though, so probably not a whole lot of oomph left in that. And again, in a deflationary situation, which is what some are talking about, simply because of the supply. I think that you saw that with Nike coming through. They had tried to ramp up, supply and things when there were the disruptions, and now you end up with a slight glut. The question is it temporary, or is there going to be a demand fall off? Haven't seen that yet. The consumer's still been buying. The question just becomes at what point do they become overladen and unable to continue to push on? And there's still plenty of excess left in the market. I don't think that that's going to end anytime soon. The question was whether or not the Fed would stop long enough to allow the economy to absorb the moves that has taken place already. And I don't think that they've really given it enough time to allow that to absorb, simply for this idea of fighting this headline inflation number, which they're never going to do. They're just going to have to change their target from 2% to a different number. That's what the market expects. The Fed hasn't done that or said they're going to do it, simply because they're trying to get things back out of a parabolic state into more normalized without going into, crash mode. So they're trying to straddle a line. Whether they'll be successful or not will be interesting, because there's a lot riding on if their decisions are too fast. This is what Bernanke did in 07, 08, raising rates too fast, too quickly, and literally his paranoia over inflation really collapsed everything. It was that simple. So it was, and we already know that we were headed with a negative growth situation into recession. The question was just how deep it was going to be, and of course now they've changed definitions. Nobody cares about that, because at the end of the day, it's just about you know how slow things will get. When we're looking at oil, still maintaining up around that 80 range, and that doesn't provide a whole lot of relief. The fact that it's not rising further is the benefit, and whether or not the economy can absorb the elevated levels. And that really is going to be the question mark for the Fed, because some of these things literally are so dependent upon what happens with oil. Move from the 80 down to 60 would certainly stimulate a lot of things and probably stave off some of the negative impact that can happen, but we're not seeing any of the changes that would be needed in order to get that. And interestingly enough, Bitcoin in that during the market collapse has held fairly strong right in this area. This is something I was talking about, the potential for it to move. Of course, now we're seeing MBI White leading this. Magenta's still in control, but has to continue to maintain its upward thrust. Otherwise, pivot now of Magenta at this stage would likely lead to a break of those lows. So it's something to watch for. And of course, now you're getting the new stabilization 0% number on the Morganacci here for the Ethereum. And it has that pivot, but the white hasn't eclipsed it yet. So we'll be watching those, because I still think that once people get a little bit more frightened about the prospects of the regular fiats, that could be a second run for cryptocurrencies. And so we'll see how that one plays out going forward. You can see from the 5K, even in the pump up, it was still looking very negative with the white leading. No reason to change that. And as soon as that magenta pivoted, it just all let loose and caved right back down. So that was pretty clean from that standpoint. And from a 5K, there's a lot of activity. We're not quite back all the way to the beginning of the day. I have to go back a little bit further for that. There it was. So it was a little choppy in the pre-market, and then there was this nice pre-market rise that took place really early, and then that faded back even before the open. And then we started getting some dramatic moves from MBI White spikes that suggested a 0% move was coming, and it took a little bit of time, but I don't know, right as the pre-market actually opened is when that hit, and it stabilized quite a bit. And there was a nice little rally throughout most of the mid-morning until we hit another lower pivot on lower shakeout. Still had gold rising, and it wasn't really until that gold faded, which was a few bars later, that it finally broke down, and it was that pivot right here of magenta underneath the 25 that started it, and that led to that fill back of all that. And there were just a few positive extremes that had taken place in between there. So all that's pretty consistent with what we expect from those readings. And I've made some adjustment plays with the red leading and where it is relative to Morganacci lines. Typically, when we get past like that 38%, we tend to get a little bit more strength, even if red's leading. But below there, no, it typically stays into the negative category. So you probably won't notice that, other than just some color adjustments that take place a little bit further along. And you can see that selling continued all the way through the afternoon. There were just no late Friday buyers, and literally followed all the way through. So that's where we ended up with. As always, though, I will continue to update you on the Skype chat, and indicators have been sent out, so everybody's all set to go for start of what really should be a really exciting time, given election and everything build up going into it. So I think October could be a wild one. I mean, you're already looking at a market that's extremely depressed, so the upside sparks, I think, are going to be the more interesting one coming into this month going forward. So we'll be looking at how that all plays out. Trade well. We'll talk again later.